Good morning, everybody. It's Cowboy, 8:31 AM EST. PPI data just was announced, so we are going to jump right into the charts. There's a QR code on the top right-hand side of the screen if you want to zap that and go to our website, see who we are, what we do. But let me go ahead and share the screen, and we'll take a look at what's going on in markets. PPI data, like we talked about yesterday, this is inflation data, right? So when you're trading, especially for trading, say, currency, Forex, but just about anything, you want to take a look at the calendar, right? The Forex Factory is one source. TradingView actually has its own calendar, and you can put all these economic events on the calendar. It's super convenient. So actually really well done. I think TradingView is just a great platform all around. There is a referral link, and I believe you can get a discount in the description. Go ahead and check that out. But the PPI data came out higher than expected. So the inflation is a little bit higher than expected. You can see this 0.5% over 0.2% for month over month. And that's core PPI. That would be excluding food and energy, right? And then there's, again, a similar overshoot on the entire, holistic PPI data. So what this is about is this is the cost that producers are paying, right, to produce goods and services. And so when the cost of production goes up, then of course the price of these items goes up, and we may see a similar reflection in the CPI tomorrow. Nothing really surprises me anymore at this point, but basically a hot number means that all of the rate hiking hasn't quite done the job that it was expected to do, right? So to put it very basically for people who might be new to the game, Jerome Powell, who is our Fed chairman, who is basically in charge of governing how monetary policy and I think fiscal policy as well is going to affect our economy, right? The Federal Reserve creates our money in the United States and actually, quite frankly, around the world. And so when you hike interest rates, that means the price of money, right? The price to borrow money is going to be going up. And so what that means is that in the world of investment, and quite frankly, just in the world right now, all money is debt, right? And I mean currency, not really money. And there are some distinctions there. We're not going to get too deep into that. But all the currency we use to pay for things, dollars, aka Federal Reserve notes, or anything else, it's all debt. And so when new money is created, it's created through debt. The government creates treasury bonds that are then, given to the Fed, and then the Fed creates debt that goes to the bank accounts for commercial banks, and then commercial banks are able to basically monetize that debt. And you have maybe $100 billion of treasury bonds gets turned into 10 or 100 times as much in dollars, or even just bonds, and that goes around the world. And that's just how money is created. It's a little bit complex for somebody who's new to the game, but what matters, really, I wouldn't worry too much about those details, but what matters in this scenario is that when the interest rate goes up, it costs a lot more money to create money, right? Because all money is debt. And right now, like I just said, with all money being debt, money that goes into the stock market is grossly borrowed. I mean, almost all of it is borrowed money. So, for example, you hear about the buyback programs, right? So Apple is notorious for being probably the biggest buyback corporation in the US, right? They have well over $1 trillion in historical buybacks. And what they do is they create corporate debt, right? And the yields and the returns on corporate debt are going to be influenced directly by the Federal Reserve's interest rates. So in this environment, it costs a bit more money to even create that debt, but then they can take that debt and sell it. I think they sell it on the secondary market. I'm not sure where they're selling it, but they use that debt to collateralize, and they actually get money, and then they can take that money and buy their own stock with it, and then the stock goes up. And essentially what they're doing is they're selling rights to their company's future in order to create money and boost their company's value today. And the problem with that, of course, is that those bonds that they create, they're going to owe on that money. Those bonds are basically, like I said, they're selling future rights to the company to boost the stock price today. So kicking the can down the road, and the large companies are all doing it. And that's how our stock market goes up in a big way, especially when you're looking at the indexes. These large companies are all doing a lot of that. And even outside of that, even outside of buyback programs, when people are borrowing money, a lot of that money going into the stock market is going to be debt. And technically, all of it's debt. So what we're looking at now is a lot of inflation, and the hiking the interest rate. I mean, technically, it should be putting a damper on markets. It should be making the markets fall a bit. But there are some mechanisms out there, some whiz-bang financial tools that seem to be holding the markets up. So if we were to go look at, say, first of all, we'll look at the currency market right here. This is the euro versus the dollar. So the stronger the dollar gets, the lower this chart gets, right? So the initial move down, and this is on a 30-minute candle here, when that data came out that we overshot the inflation, what that means is that there's a good chance that there will not be an interest rate cut, and technically there's a chance there might be a hike. So the dollar gets stronger in anticipation of that, because when you're going to up the interest rate, dollars become more expensive. They become stronger. So the initial move was downward, but you can see I have some lines on here, and I was looking for price to kind of return to whatever direction it was going prior to this move, depending on what the numbers looked like. You can see prices already all the way back up here. So the initial spike was down based on that data, but you can see the market has returned to its prior price. And this is just a living example of how, despite the fact that things should be heading continually down in this sense with the dollar getting stronger, it's not. The market is pretty much disconnected from reality, and what has happened here is pretty much proof of that. V the Gorilla, how are you, sir?
Oh, yes. Good morning.
We're just talking about how markets are disconnected from reality.
Oh, yeah, completely.
We just had this basically strong dollar news, and the dollar just continues to get weaker on the charts. And you'll notice I didn't take, well, actually, I don't have the right screen up here, but I didn't take a trade on this. I actually waited for the data to come out. The algos had everything is bullish for the euro, meaning bearish for the dollar. And so I let the news come out. And even though the news should have pushed price down on this, because it was a notable overshoot of the producer price index, meaning inflation is higher than it should be, meaning that chances are there's no cut or even a hike coming in the interest rates, this chart should be going down, and yet it's not. So obviously I didn't take that trade, and a lot of people who would have taken that trade, okay, if you're super, super quick in the draw, you might have made a little money here, but a lot of people probably simply got stopped out of their trades. And that, trading news is pretty dangerous. But I could kind of mess around and take a long right now, but I'm going to let this cook a little bit and let the market absorb this data and look for a good entry, and then possibly grab a long on this. We'll see if the algos line up for that. So how are you doing this morning, sir?
I am doing, sir. I am doing.
Doing is good.
Doing is doing.
Doing is doing. Oh my God.
I am doing.
All right. Well, let's just take a quick look at Bitcoin, and then we'll move over to the private live lab. Solana doing what I said it would do several days ago, just continuing to range to the side, and that's just where we are in the market. Solana is still pretty strong. I mean, there are a lot of cryptos that are not doing as well as this. Some pretty strong ones like Injective and stuff that are actually continuing to have outflows, but it appears that Solana is catching its support right here based on this prior consolidation right here. And we talked about this a number of times in the private, this depiction up here with these price paths were drawn during the private live lab. And of course, there are trades that can be kind of made out of this, and that is what that is. But Bitcoin itself, let's see how it reacted to the data. Okay, so I was actually up pretty late last night trading this, and anybody who is crazy like I am would have seen me draw this last night. I was actually in some pretty good spaces last night, some good crypto spaces, and uncharacteristically, I didn't get a chance to talk. Usually they let me up there, but these were people I don't know. But long story short, this move down, I was like, yeah, this is going to go down. And they were all kind of surprised by it. But one thing I want to mention here is that prior to this, and this is like a 3-hour chart. So basically this candle, this big, I'm going to denote this candle so y'all can see what I'm talking about here. Give me 1 second. So this orange candle that below this arrow that went downward last night, it's kind of obscured by this green ribbon, but that was a nasty move. That happened within minutes. And my algos had it going. My algos had it happening. And a lot of people thought it was going to bounce up immediately. I said, no, it's probably going to flounder down here for a while. And lo and behold, I get up, and that's exactly what it's doing. It's going to have to grab some support before it goes up here. And then up here, I've got to take a look. Maybe we'll look in the private lab to see if this liquidity still exists up here, because that was part of the deal. There's a lot of liquidity last night sitting up between 63.2 and 63.8. And of course, as Bitcoin ranges down here, if the charts hold as I think they may, price may hop up, grab that, and then it might go down, it might not. I just had that as one optional path that it breaks the bottom here, but it might not, it might hold support at 62. And the longer price stays above 61,000, the bullish and more bullish the market will get. But actually, it does appear that Bitcoin's heading up, which is pretty much the opposite of what you would expect from the PPI news this morning. So for the very moment, price is either going to range where it is, or it might head up and grab this liquidity. And we're going to dig a little deeper into that, into the private show. Daniel, thank you for the compliment there. I'm glad I could elucidate. Via the Gorilla, sir, can you get us out of here? Get us over to the private.
Absolutely, guys. Listen, join us for less than the price of a bottle of water. $1.66 a day. $1.66 a day. You can join the most prolific trading community in the world, where you not only learn how to trade, but you learn how to build the algorithms that trade on your behalf 24/7, 365, no matter what market, anywhere in the world. That's number one. And number two, you get the geostrategic and the geoeconomic, which is very, very key. So you know what the market trends will be before it happens. We have the best, most uncanny trends forecasting on planet Earth. I promise you that. And with that being said, Cowboy, let's go private.
Join us or die.